Hello traders, it's Wednesday evening, November 13th, and that means that it's time for my weekly swing trading video. We're going to try and find some swing trades. We've done really well for the last month and a half or so. We identified this breakout above the 100-day moving average. We started selling out of the money bullish put spreads, and we haven't stopped. And this breakout right here at SPY 302 was also very nice. We tested it once, tested it twice. As soon as that held, buyers came in, had a little bit of volume here, and then we floated higher on very light volume, unfortunately. If we had heavier volume, then we could really trust this rally, but the level of conviction is low. Asset managers are not worried that they're going to miss a year-end rally with stock valuations trading at a forward PE. The Fed is done for the year, so we don't have that safety net either. But conditions are improving with regards to trade negotiations, and we have a little bit of a reprieve from Brexit until December 12th. So there's less uncertainty in the marketplace, and that's one of the things that's causing it to float higher. Earnings season was better than feared, actually quite good, and guidance also was decent. So stocks are kind of waffling around, trying to inch their way higher. There's really not been a lot of activity, so that is good for premium sellers. It's good for put sellers, and it's good for call sellers for the most part. You can see how this little grind higher is starting to hit some resistance here. We have a tail above body here, a long tail above body here, and you can see how we had a similar formation here. And then we pulled back. But back in here, we still had a lot of uncertainty. Here we don't have as much uncertainty. My guess is that we're going to get some kind of negative news event, and it's going to spark some programs, and we're going to get one nasty day, and it's going to flush out all the bullish speculators who got in on this breakout. They buy this breakout here, market retraces to the breakout, they get flushed out, and then we get a really nice bounce back. So we've been gradually buying back our bullish put spreads for pennies. We're almost in cash right now, so we don't have any positions on. We closed out our SPY position today, so right now we're just looking to reload. We have very little risk exposure. We're hoping for that big pullback, so we're going to be looking for opportunities on both sides. I'm not going to get super aggressive with selling out of the money bearish call spreads, but I do want to show you some because I want to make sure that you keep those trading opportunities in mind. We'll also look for some bullish put spreads. So let's go through and take a look at how we did last week. I'm going to go into lists, look at November 6 bull. And let's see, the video came out right in here. We had two bullish hammers. We got earnings before the open there. ABBV has done very nicely. Adobe, we had this nice support level that we could lean on with Adobe. Earnings are on December 12th. You can find that out by simply hovering over the E. You know, I'm going to add Adobe to our list because I do like this one. It's still in range of that 100-day moving average. I like it. Got this downward sloping trend line that's been breached. It's had pretty decent relative strength this week, so let's put that 1 OSI indicator up. There we go, and you can see it easily above zero. AIG, we would have put that on right in here. So it has been down a little bit, but it's still hanging on to that 100-day moving average. So if you've got the No 15 put spread on using that 100-day moving average, you've had time decay work in your favor, but the position may be a little bit against you right now. As long as we stay above the 100-day moving average, I'd stick with the position. If it closes right here, you'll still be okay. Alibaba, so we've got the 6th right here. Stock went up nicely, and then now it pulled back today. So apart from today, it's been in pretty good shape. We need this breakout to hold right here at that 180 level, and that was our short strike price. So we bounced off of that today, and we got 2 more days until expiration. So should be in decent shape on that one, but again, really not a whole lot going on. FFIV, we wanted it to hold that 200-day moving average. There's the 6th right there. It was just poking through it, still kind of hovering right around it. So expiration and time decay coming up in 2 days. Probably going to be okay with that, but we need to watch that 200-day moving average. We don't want it to drift too far from it. Met has moved higher. That's been a pretty decent one. Should be making money on that. Tesla, very nice. That was November 6th right there. That was just an outright long, beautiful breakout. Really, really good one right there. So that worked out well for us. And we were focusing on bullish put spreads. We weren't focusing too much on the bearish side, but in a market that's been going up, let's see how our bearish picks did. Hopefully, they're not up too much. DD. You can see how it's not been able to get through the 200-day moving average here. We got a couple of long tails above body. We've got that moving average holding. I like this. I like this spread a lot. And today it was down, so that should be in excellent shape. KO. There's the 6th right there, drifting lower. That would have been in really nice shape as well. There's another one, really nice shape, OXY. PayPal. The 6th is right here. That's moved a little bit higher, so that one would be against us. But again, if we're selling bearish call spreads, still a long way away from that 200-day moving average. Time decay working its magic, should be okay. WDC, I think you can reload on this one too. I like this one. You can reload on it at that 200-day moving average. Look at the relative weakness here. You had that big sell-off. And there is the 6th right there. We're selling at the 100-day moving average. That would be a very, very nice trade. Bearish call spread using that moving average. And right now you could use it on that 200-day moving average. So I like that one. XOM. Really nice. Let's see where we got here. Right in there using that 100-day. You may have been stopped out here on the next day because it poked up and actually closed above that downward sloping trend line, but the next day it fell back below the 100-day moving average. If you reestablished, you're in decent shape. But we really weren't doing a whole lot on the put side, on the bearish side, but all of these, considering that the market went higher, did very, very well. And our bullish picks did well also. So out of about 12 trades, I think there were maybe 2 or 3 that might have been moving against us slightly, but by being short premium, time decay should put those at close to a break-even position. The other 9 positions did very, very well. So I'll take those results any day of the week. So let's see what we can find this week. I went in and I took a look at a bunch of searches in the scanner. I went into the normal suspects, pop bull and pop bear and heavy buying and heavy selling, and I found some decent picks. I also went in and used the custom scanner, and that's where I really found some that I liked. And I'm going to bring that into view. Before I do that, let me mention that if you're watching this video on YouTube, subscribe to this channel, and you're going to see daily videos that are posted 1 hour after the open. And everything that we find tonight is available on Option Stalker. Go to www.oneoption.com and you can get the Option Stalker platform. Now, if you do subscribe to the YouTube channel, you're going to be notified in the morning when I post my daily trading videos. Yes, it's primarily for day traders, but before I day trade something, I typically like it on a swing basis as well. So you can pick up a lot of good swing trading ideas by doing that. If you like the content, please give it a thumbs up. Now, the swing videos, I do wait about 2 or 3 days before I release it to YouTube. I want to give members a chance to enter these trades. So the advantage that you have is you're watching them 2 or 3 days after the fact. Go back and take a look at how all of the picks have done that I highlighted. And when you watch the video, every week I like to show you all of the picks from the prior week. Not cherry picking, not some of them, every single one. And I think you're going to get a real feel for how consistent this approach is. So let's take a look at some of the stocks that came up. And we'll put up the custom search engine here. And might as well start with the bearish side because I've got that marked off right here. So all I did was I went in and I looked for option liquidity rating greater than 3. And I'm looking for a sell signal on a daily, 4-hour, and 2-hour basis. So across multiple time frames, we're looking for a sell signal from our system. And I'm looking for relative weakness on a daily, 4-hour, and 2-hour basis. And then I click scan, and I could go through all of these stocks right here and tell you what I came up with. Didn't take me long, just click, 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 just went through the charts, and I found about 7 or 8 really good shorts. Then I went to the flip side and I marked off bullish, 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 and I ran another search. And these were a lot of the bullish picks that I came up with. Now, I'm going to highlight Apple for a second. Apple looks great. Super, super strong. Got a long and strong upward trend line here. So I would not want to be bearish on Apple, but I also wouldn't want to be bullish because stocks that have taken off like this, when the market does sell off, these are usually the ones that see really heavy profit taking. And so you'll see a big drop in it. And so for that reason alone, I don't want to be selling any bullish put spreads on it because one little whiff in the stock will send it down $7 or $8, then we're in the money. I would rather find a stock that's been selling off or that's near a low and has been grinding higher off of that low and has multiple support levels like 100 and 200 day moving average. See how far away from those 100 and 200 day moving averages Apple is? I've got nothing to lean on. I've got a very steep trend line that I can draw and lean on, but those steep trend lines are very easily broken. So you'll see in the picks that I have tonight, really looking for something that has not participated in the rally to any great degree, but that has nice recent strength. So let's move that off and let's go through the bullish picks that I found. I like Disney. Now this one is not typical for what I look for because of this huge day that it had today. Now it announced that it has 10 million new subscribers for its streaming video service. So that is going to be very, very good for Disney. Came out of the gate strong. They had some server issues yesterday, but excuse me, those seem to be resolved. So really nice breakout here. That's what we want to lean on, is that big breakout right around the 146 level. Now, I wouldn't suggest coming in tomorrow and banging away on this thing. We'd love to see it pull back and test that breakout. And that 146 is where we would start looking to sell those puts. Maybe the 145 strike actually would be a little bit better. Now, if the stock does not pull back and lift off, then you have to avoid it. Let it come back. Let it find that support. And then you would be looking to sell those bullish put spreads. Now, I did actually sell some today, but I used the 140 strike when the stock was still down in here. Actually, the 142, 141 bullish put spread. And I actually posted it on my YouTube site in the comments as well. I was able to get 32 cents for that, and it expires Friday. It's probably trading for about 7 or 8 cents now, and tomorrow when the market opens up, it'll probably be trading for a nickel or less. So I'm going to let that expire, but you had to kind of catch it early. As the day unfolded, you could see Disney really taking off, and it was coming up on our volume searches right in here. When we see a pattern like this, and this is actually on the 4-bar breakout search on a 5-minute basis also, I noticed it. So it was in a number of different searches, but you had to catch it early, and if you did, once it compressed and broke through this level, that's when I started selling that 142, 141 bullish put spread. So really nice, but it's got to come back and it has to test that prior breakout. Otherwise, just let it go. So in all likelihood, I'm not going to even put this one on, actually. It's just too far out of the gate, and there are too many ifs. You have to really watch it. But I'll tell you for next week, if it comes back and it tests this 146 level and it bounces a couple times off of it and I see a long tail under body and the stock is continuing to grind higher, then I definitely will be looking to sell a bullish put spread on it. If it keeps going higher and higher, I'll day trade it from the long side, but I won't be selling any bullish put spreads on it. So that one's not going to make the list. CAH, I like this because we've got a nice little gap here. Stock comes back, it fills the gap in just about. We've got a bullish hammer here and continued relative strength. So I like selling that $52 strike price right in here on CAH on the idea that that is going to hold. That breakout's going to hold. You've got the earnings there. It's making a new high. So yes, I do like CAH. MDLZ is the kind of stock that I was looking for that I mentioned earlier. So you have this nice little downtrend here that's been broken to the upside. You have the 200-day moving average that we can lean on. And that 200-day moving average is right around the $52 strike. So I'd sell the $52 puts. This is a food company, so you're not going to get a lot of premium. You're going to have to go pretty close to the money, and you may have to go out to the December expiration. You probably will have to go out to December expiration. So I'd say the December 52, 51 bullish put spread would probably be good. It might even have a 52.50, so you might have to use that strike. But I would go out to December on this, and I like the pattern. Got some long tails under body here. So the stock has been able to find a lot of support here right around the 200-day moving average. Food company, nice, steady stock. Also got a multiple support level right here, horizontal support level here. So that coincides with that 200-day moving average. I like it. MDLZ. Nike. Nike, I like this. It pulls back. Got a nice solid base forming here. Some long tails under body. We got the 100-day moving average that we can lean on at that $88 level, but I think we're going to have to creep a little bit closer and go to the $89 level on this one. So I like that one. Adobe, I showed you earlier. Love it at this $100 strike price. And that's it for the bullish side. Let's look at the bearish side, see what we've got. Not all these stocks are going to make the list. I got to see which ones I really like. Johnson & Johnson just a little bit too choppy for me, but this is the type of pattern that I'm looking for where it can't get through resistance and it's below that 100-day moving average. Plus Johnson & Johnson's been pretty newsy, so we're going to stay away from it. We tried to buy this breakout after earnings, and this is one of the only losses that we had on our bullish put spreads that week, and that was a nasty one. So, but that is just an example of what I'm looking for. FDX. I think this is a nice one. It comes up to the 200-day moving average, can't get through, starts to back off, relative weakness through the 100-day moving average. Got earnings on 12/17, so plenty of time. Definitely a few different expirations, and we can lean on that 100-day moving average. So I like FDX. I think that's a really good one. This one may surprise you. It kind of surprised me when I started seeing it in the searches. Amazon. So we have a downward sloping trend line right here. Stock tries to get through the 200-day moving average, and it fails. And so now that becomes resistance, and you can see the relative weakness in here. So that stock around the 200-day moving average, you're probably not going to get the premium that we need right now for it, but this is the pattern I'm looking for. Anything around that 200-day moving average, that's where you would sell your bearish call spread. CSX, and I'm not going to put Amazon on the list this week because it's too far from the strike. So here we've got actually a nice cup and handle formation with a breakout through this neckline here. That was really nice, but it gets through and it tries to fill in this gap a little bit and it backs right off. Long tails above body, and now it's below the 100-day moving average. That's also a horizontal resistance level right here. I think this sets up well for a bearish call spread using that 72.50 strike price right in here. So CSX, definitely like it for a bearish call spread. HLF, grind, 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 grind. Really nice pop after earnings. Gets to the 200-day moving average once, twice, 3 times. Third time was not a charm, and it backs off today. So we're starting to see some relative weakness in it. I think you can key off of that $46 level. Stocks at $44, should be able to get a pretty decent premium on that one. So I like that for a bearish call spread. WDC drops after earnings. We had this on our list last week. Gets up to the 100-day moving average. You sell your bearish call spread here. That was a really nice one. I think we can sell another one right here using that 200-day moving average, especially if we see some continued weakness. Finally, WYNN. There we've got another one that pokes through that 200-day moving average, earnings after the close, pulls back. Now the 200-day moving average has failed. It's testing that 100-day moving average. If that 100-day moving average is breached, then I think you can use that and sell your short calls right around that 118, 119 level. And we're starting to see some relative weakness in it. So let's do this. Let's go into lists. And let's create a list. No 13 bull. And so on our bullish list, we had Disney. Gosh, I think I decided not to do Disney because it's too far out of the gate. CAH, MDLZ, NKE, ADBE. Only 4. And there's a reason for that. We do not want to go gonzo right now on our bullish put spreads. Right now the market is doing a whole lot of nothing. And we've got very, very light volume conditions. So that is dangerous. I'm going to show you one other thing that poses a lot of danger to us. So we have to go so close to the money to get a decent credit that one little whiff in the market and all of our bullish put spreads will be a problem. Boom, 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 boom. Everything becomes a problem instantly. Well, we don't want to do that. We've just had such a good run right here. We have to be patient. We have to wait for that pullback. This is where most novice traders go wrong. They always have to have something on. Oh, look, it's floating higher. It's going to go higher. Year-end rally, Santa Claus rally. Everything's great. No, there are a lot of headwinds in the market right now. Yes, we're moving higher, but there are all sorts of things that can come into play. All we need is for Trump to say, I'm not going to repeal the tariffs like China wants us to, and everything falls apart. We know how hard this trade negotiation has been. That's all it would take. We don't have a safety net provided by the Fed either. So who knows what the news could be. I am looking for a one big day sell-off, and that'll be our dip when we can start going in, reevaluate, and we also can see option premiums go higher. Look at option premiums. This is the VXX. Let me zoom out. Look at that. Option premiums are minuscule. This is almost a buyer's market for premium right now. You're not being properly rewarded. In fact, you can see I've drawn a downtrend line on a GTC basis. I want to know when the VIX starts to spike because that could be a potential warning sign that there's uncertainty coming into the marketplace. Asset managers are starting to buy some protective puts. And when I see that happen, I'll know that the market might be ready to have the dip that we're hoping for. So those are our bullish picks. I'm going to have quite a few bearish picks, but that doesn't mean that I want you to go out and initiate all of these trades. For every 2 bullish put spreads you do, you should have 1 bearish call spread because the market is still floating higher. So we got no of 13, bearish. And on this list, we've got FDX, we have CSX, we have HLF, WDC, and WYNN. Now, I also want to mention one final thing, and that is that if we do get a market pullback, the stocks that I think are going to get hit the hardest are going to be your cyclical stocks. Stocks like John Deere, Caterpillar, 3M. You can see they've all run up a fair amount. And if there's no China trade deal, or if economic conditions start to soften with the Fed on the sidelines, these will be the first stocks that get hit. I think those will be really good for buying puts or for selling out of the money bearish call spreads. So I've been saying this for the last couple of weeks. We've distanced ourselves from the action. We've sold out of the money bullish put spreads. We've done very, very well on them. Exactly what we thought was going to happen in the market is happening. We've got it gradually grinding higher into year end on very, very light news and very, very light volume. It's time to be careful. Our puts are going to expire worthless this week, or we're buying those spreads back for pennies. We're in mainly a cash position right now. That's perfect. Let's just wait. Let's wait for the market to come in. We're not going to miss a ton of upside. We got a couple of candles here that show us that there's resistance above, and we got a little bit of gappiness here from one day to the other. So not a really strong, powerful market rally, and I don't see a catalyst for that either. Even if we sign a truce with China, it's not going to change anything. So maybe do 2 bullish put spreads, 1 bearish call spread for the week, and that's it. And just wait, wait, wait for that pullback. It may happen very, very quickly, and then when it does, we'll be ready to jump on a lot of these trades as the stock pulls back. That's it for this week. Have a good night. We'll see you tomorrow morning.